Ladies and gents, how's everybody doing? Happy Friday. We'll get started here in a second. Give me a call if you guys want. The number is, was on the screen. It's 669-900-6833. The code is 169-861-119. Hope everybody had a great week. As far as trading goes, hey, any pips above 0 is good for me. So I would have liked to make a little bit more this week, but it was a little weird. Next week though, my God, we're gonna talk about that. Next week is gonna be fireworks, people. FOMC. Rate decision next week. We got ECB, Bank of England, actually, not ECB, Bank of England, BOE, rate decision. It's gonna be wild, man. It's gonna be wild. Yeah, it was pretty good, T-Will. Pretty good week. Like I said, I can't complain. Above water, so can't complain.
Fuck it! Do it live! I'll write it and we'll do it live!
Okay. Ready?
Fucking thing sucks! We'll do it live.
Okay. And welcome to another episode of My 2 Pips. I made more than 2 pips this week though. Thank God. Thank God. Hope you guys are doing well today. Let me just get this chat room cracking here. There we go. Make sure you guys hit that thumbs up. And definitely subscribe if you haven't subscribed yet. I know most watching probably are subscribers of mine. So this is strictly, trading. These series that I'm starting, I just started. This is my 3rd episode actually. So this is going to be just trying something out, man. I love trading. That's my passion. That's a source of income for me. And so it's just great to be able to hang with other people and talk Forex, talk crypto a little bit, but primarily Forex and just trading in general. So glad to see you guys here. Let me see who I have in the chat room. I got T-Will. I got Will45. Who else I got? I don't see anybody else not yet. I don't see anyone else yet. But we got about 10 viewers right now. Looks like maybe delayed, but we're gonna get started here. And we'll go through essentially the trades for this week. I had to update my algo to close the positions got them closing at I think 3:50 p.m. Eastern Standard Time. I didn't have it represented that way on the charts. I manually always close my trades over the weekend. You guys let me know, do you close your trades or keep them open over the weekend? You're a cowboy if you keep your trades open over the weekend. At least I wouldn't keep anything substantially large. Whatever your normal trading size is for the week, I personally wouldn't keep that much open. I definitely wouldn't keep that much open. You never know what can happen over the weekend. You just never know. Joy in the house. Thanks for joining. I think she is a member as well. So thanks for joining tonight. So we're going to look at these charts here in a second. I want to first take a look at, as I told you at the beginning, guys, next week, fireworks. Let me tell you, we've got a lot coming up next week. And normally, you know, this is when you can really get ahead for going into the next month in your trading. You know, when you have these types of meetings, these types of rate decisions and stuff like that, excellent opportunity to get ahead and make some pips, earn some pips. But really quickly, I didn't even know this, but the NY Fed's GDP forecast unchanged. Unched. That's what they like to say. It says the U.S. economy is expecting to expand by 1.2% in the last quarter of 2019 and by 1.7% in the first quarter of 2020. Federal Reserve Bank of New York yesterday reported that on Friday these readings matched the ones in the previous publication. I personally, I don't think GDP is going to hit 1.2. I've seen prints of negative, not prints, but estimates of not negative, but 0.5, 0.2, sub 1%. So we'll see though. It's going to be interesting because the economy is doing well right now. From just looking at the numbers. So we'll see how that pans out. I don't even know when GDP, we can look at that maybe on Forex Factory. I don't even know when GDP is going to be announced. Let's see here. I'll go out to next week. Let's see. Consumer confidence. It's on Tuesday. FOMC. That's the big one. Wednesday, people. Oh my God. Wednesday and Thursday of next week are going to be fireworks, and we're going to go over that too. I'm just looking for GDP numbers, and it looks like GDP is going to be on Thursday as well. Advanced GDP quarter to quarter. So another big mover if we see, a miss or not. So we'll see about that. The other thing I wanted to take a look at was the dollar index. So the Dixie is like an index to really show the strength of the dollar, relatively speaking, against other currency pairs. So fiat currency pairs. So the Dixie has been really strong for the last, I would say, year or so. It's been really high. So that just lets you know. I mean, we've seen a drop lately, but if you look at this chart here, I don't know how much of it you can see. It does look a little small, but I mean, we were let me see, September of, what year is this? It looks like last September. So last September, man, Dixie was at like 99.60. So really strong for the Dixie. That means that people around the world want dollars. They are interested in obtaining dollars. So, I know we always talk about how the dollar is weak. And it's weak. As far as its value over time, we know that it's lost over 90%, 99% since like 1913. But when you talk about the dollar in relative, from a relative perspective, it is stronger than ever, or very close to being stronger than ever. So, that you have to look at what the market is telling us, and the market is telling us that there are no other currency pairs out there that these countries and people around the world rather have. They rather have those dollar bills, those dead presidents, as they like to say. So Dixie, very strong. and it's been trading above the main simple moving average and a bullish trend line. So it's suggesting a constructive bias in the medium term. It says the greenback is breaking out from an inverted head and shoulders formation, as you guys can see in this chart right here. This is an inverted head and shoulders. And we just saw a head and shoulders in Bitcoin, I think last week or so. So it's interesting to see an inverted head and shoulders in the Dixie, the dollar index. So when you have an inverted, so a head and shoulders, if this was flipped or mirrored the other way, a head and shoulders would be a bearish sign. It means we would make a new leg down. An inverted will say, or kind of hint toward the market or to the market, that we could possibly be moving up for newer highs. And that's what we're seeing going on right now with the Dixie. So a stronger dollar means, against at least commodities, you could possibly be looking at weaker commodities. It's very possible. Maximilian Price, what's going on, brother? Yes, better late than never. So yeah, you guys, a strong Dixie means that gold is going to be heading lower, or could possibly. You could have gold rally with a strong dollar as well. That's happened in the past before. So I'm not saying that can't happen, but typically if the Dixie is strong, you're going to have gold be very kind of inverse. It's going to head lower. And that's with also like silver, not palladium though. We know palladium's been on a tear. But yeah, most of your commodities should, be weaker in dollar terms when that happens. So another thing I want to show you guys is gold. Gold is rallying right now. Not rallying, I wouldn't say rallying, but gold is looking strong. It closed the week above the 1570 level, which is a key area. You got to get above 1580 to try to take out that 1600 level. I think if we take out $1,600 gold, you'll see a nice little push up. I think, you may see like a 3, 4, 5% move up if we breach the 1600 level. I can't remember if we breached it before, but if we have, we didn't stay there long. Yeah, we did. We had a nice wick. You see that wick there? It didn't stay up there long. So a bullish sign though is that we're trying to go back there and test it again. So the bulls want to try to test that area once again to see if that's a true area of resistance or not. But I think because we're heading back up there, just what was that? Maybe about a week and a half ago, we saw that breach of 1600 on that day. I think since we're heading back up there, it probably will push through this time. So all you gold bugs should be happy. Should definitely be happy. So give me a call if you guys want to chat. We're gonna just getting started. Really, I want to go through some key events coming up in the week that you should be preparing for. I'm preparing for to basically just be ready to kind of trade around those levels or those events. So we're gonna take a look at that, and then we'll get into the trades for this week that closed out this week. I was telling everyone earlier, for those that are new, just coming in, it was hey, any pips this that you can close a week positive above zero is a good week. I would say it's been times though where I've traded and at the end of the week, the ones that when you end the week negative in pips, they kind of hurt, but the ones that really can get to you are the weeks that you trade literally like 10 pips, 5 pips above ground. You're like, man, all that trading for nothing. But that's how it is. That is a real, if you're going to take this trading stuff seriously, you have to look at it as like playing a sport or something, right? Most teams go through the season, they don't win every game. And when you do that, it's an anomaly. Many times those teams end up losing the championship. But I think for me, when I end the week barely above 0 pips, that gets to me. That gets to me big. So we're gonna look at that. But I do want to go over this other article really quickly. So gold looking strong, as I stated. And I personally think that gold will breach that 1600 level. Probably, you know what? Definitely by Wednesday. Like after Wednesday, we'll definitely know. Because if the Fed cut rates again, or even if the Bank of England, even if Mark Carney cuts rates, which that's actually expected, you'll most likely see a rally of gold versus the pound for sure. But as far as the United States, if the FOMC, if they ended up cutting rates Wednesday, then you're gonna see a rally in gold for sure. That's my assessment on it. But let's take a look at this last article. And this really goes through this coming week. It's going to be a busy one. I'm telling you. Money to be made this week, people. All we need is some volatility. That's all we need. So it says here out of Oanda's weekly little report they do. They said central banks back to the fore. It said here this week it has the spread of coronavirus that's making investors nervous. But there's not a full panic, they say. We did see a decline of about 3% in China, though, off of this coronavirus, which is expected. That's the epicenter of, this whole thing going down. It also goes on to say that central banks come back to the fore next week with a possible rate cut from Bank of England and the Federal Reserve's first meeting of the new year. Those are the two standout events. The meeting marks an end to a messy tenure of the BOE Governor Mark Carney. I forgot. Yeah, he is leaving. And it could be going out with a final rate cut. So again, the ones we've got here, Monday, not so much of an issue that we will see real volatility. Like we may see something out of Germany from the current conditions report, the IFO. We may see some action there. New home sales normally don't do too much to the FX market. But Tuesday, not even Tuesday, that they're highlighting Hungary. Something going on over there. I don't trade any of those pairs. But boy, here we go. Wednesday, the fireworks start. Wednesday, we've got the Fed funds target rate. So they're looking at 1.5 to 1.75 or 175 basis points. What do you guys, let me know in the chat room, do you think the Fed will be cutting rates this week? I think so. They're going to keep this thing going. They're going to keep this train going. The person last night, I forgot who, someone last night said that the stock market is on steroids, and it is. And they're going to continue to inject more stimulus via the repo, via the via interest rate cuts. Going to continue this thing going. I'm telling you guys. So I personally expect another rate cut this coming Wednesday, FOMC. I hope you guys are ready for that trade. But then to even go further, because most of my algo pairs are pound related, or I should say, for those that may not know pound, I'm talking about the cable, the UK dollar. So Thursday though is the big event for UK. So we got BOE MPC vote hike, and then we've got some interest rate, bank rate. That's going to be crazy. And then we've also got UK's Bank of England's QE Corp. I don't know what QE Corp is. Maybe I should look that up on FX Factory and see what they have on that date. Thursday. Doesn't say here on this particular one. I don't see anything. But the official bank rate is the one that we need to be looking out for. 7 a.m. Eastern Standard Time. That will be kicking off. And I'll just have to see at that point, by that time in the week, we'll have to see where my trades are in relation to this news. If I'm in the money, if I'm in the green on any of my trades that are related to the pound, I'm going to take some off the table. I'm definitely going to take some off the table and most likely tighten up my stops a little bit again. But it's just going to all depend on where the trades are at that point by Thursday. Maximilian said, cut the rates, the money pumps. Yep, ETFs will pump as well. Of course, Max, everything will pump in regards to the equities game. That's to be expected. ETFs are, that could be a black swan event, to be honest with you. Because what's happening with the ETF game is that it's like everyone is being pile driven into ETFs. And so you're not getting the proper valuation of these companies because you've got so many like hedge funds and stuff. They're just on autopilot with buying these ETFs every month. The inflows of money is just endless. So if there's a group of stocks in an ETF that and one may or two may not be performing that well, it's not going to matter, because if that ETF is a very popular ETF, their troubles, their bank sheets, their balances, their accounting and all that, revenue, top line, bottom line, all of that is being masked as far as in the price, because the ETF is just buying. It's just buying and buying and buying. So you got a lot of stocks individually that are overpriced because of ETFs. Is basically what I'm saying. So it's crazy. But if you guys want to call in, you got any questions on trading, hit me up, 669-900-6833. And the code is 169-861-119. So let's go ahead and take a look at these charts, these trades this week. I guess we can start off with the pound Aussie. And boy, was that we ended the week on that one. I hate that. I hate when this happens. You get those run-ups, and we talked about this the other day. You get those run-ups in the market where it will tap you out. So let me get this out of the way here. This little line. How do I delete that? There we go. Get rid of that too. So evidently, I mean, you can see it with the price action right now. I mean, 1.90, what's that? 50, looks like 59 was an area of strong support for us on the 5-minute. I mean, we bounced off there so many times. A couple of nights ago, we consolidated and it just kept bouncing. Didn't even breach it, not one pip. And then we headed higher. And as you can see, I went short right after the drop. And I thought we were going to get a break. I really did, because we kept tapping it. I'm like, oh man, we're tapping this area. We're going to get a break. And if we would have broken downward, it would have been a nice move, because I think my target was really to take some profit just off of the table and let the rest of the trades, you know, kind of ride out. What's going to be down here at pretty much 1.9, 1.9. Yeah, 1.9. So that would have been a nice little trade there. About 127 pips. So it was setting up to be a really nice trade. But it didn't go that way. It ended up moving up. It almost touched my stop loss. And it bumped up against there a couple times. Finally took me out here. If I zoom in some more, you can see. Finally took me out right here. And just to make sure, this is how these markets work. Just to make sure it got everybody, look at this wick right here. This is why I don't change my stop losses or anything like that, or move them up once we get close to the, you know, like if the market is heading toward your stop loss, don't move your stop loss. If you've got a strategy where you're trading, whatever your strategy is, whatever your trading strategy is, but let's just say in that trading strategy, you know, when you go long or go short or whatever the case is, you have a fixed stop loss. Don't change it. Don't change it. Many people trade with trailing stops, which is cool too. You could do that. But stick to your trading strategy. Do not deviate from that. And so if we go back to this screen, you can see if I would have had a trailing stop, it would have worked in my favor for sure. Actually, nah, it really wouldn't have, because I got in right here, and if my trailing stop was like right here, it moves down with it, so it would have gone down. I would have lost a little bit less than what I did lose, but I do fixed stop losses. All my algos, I have fixed stop losses and just let them play out. But yeah, Maximilian, that is definitely some, I wouldn't say, I mean, yeah, it's manipulation. It's manipulation. Because they just want to knock people out, you know. They'll, like I told you the other day, they'll see, like, you know, those guys, the interbanks is what they're called, the IBs. The IBs will see people have, like in my particular scenario, I'm sure it was a lot of stop loss orders here where that red line is, right? But they probably also saw some up here as well. You know, they probably saw a lot of them up here in this region. Normally it's like a region. It's not one area. It's because people have different strategies. So you may have a region of, let me do it like this to just fully explain it. I've never even used this shape. I don't know where shapes are in here. I don't typically use them, to be honest with you. Man, somebody help me out. Tell me where the shapes are. The square. I'm trying to bring up a rectangle. There we go. So normally what will happen is you have a region of stop losses in like this area. And the IBs, the interbanks will see that. The IBs will see that, and they'll go up there and knock everyone out. And sure enough, it did that. Came back down, but still couldn't breach that 1.90. It looks like 59 area. Couldn't breach it. But anyway, that's that trade. I only made 2 trades this week with the pound Aussie. The first trade was a very good one. A very good one. So as you can see here, I went long and I went short. Those were the only 2 trades this week for the pound Aussie. But I've told you guys, I've told you that the British Aussie pair that I have this algo tweaked on, it doesn't trade that much. In a month and a half, it'll trade 19 times, 20 times, somewhere around there. So, but the first trade was a good one. It's a good amount of trades there. Again, the problem was I took out most of my profit at like 150 pips. So took like 90% of my profits there. So the rest did ride out, but if I would have held out, we're talking about a 300, what's that, a 320, 360 pip trade out the gate. I mean, that was like a 3-day, 2.5 day trade, but that was a good trade. And then we had the one stop loss trade there, but ended the week on that pair very well, very well. As you can see down here, 2 trades, and then over here to the far right in the bottom corner, you'll see my alerts log that pushed those trades out. So the first one was again on the 20th at 6 a.m. and then the second one was a short on the 22nd right here. So Maximilian said, do you use the Ikamoku cloud? I'm familiar with that. I've used it in the past. Matter of fact, one of my previous algos was based off that cloud. Yep. But this new strategy, all my algos don't use just one indicator, and you shouldn't. An algorithm shouldn't just have one indicator, because you can pretty much do that yourself as looking at it as a human. You can eyeball and say, okay, if this happens, crosses here at this price, and I'll go long, whatever. Where you want to leverage and how you should leverage algo trading is that when you're developing strategies in that arena, leverage up as many different indicators as you could. You know, use like this particular, the new algo that I've been running for about 6 months now is, I think we use about 6 indicators. I'm using like 6 indicators in this particular algo. Now I know you probably see these dots. Those dots they're old. I need to calibrate those. But essentially those dots are take profit points. So I just need to update them for each pair. I think I only had it really running on one of my pairs, pound, dollar, I believe. But I need to really look into trying to figure out for each pair. It may take me a while, but I can figure out an area to take profit on both my longs and shorts. So I'll have something from a more technical standpoint to say, okay, maybe we're slightly oversold, but we're not reversing the trend. I can take some profit here. Yeah. So, but yeah, the cloud is a good one, man. That thing works for sure. It works, but you would need to use it in conjunction with other indicators. Yeah. What is your experience with that cloud, Maximilian? And what pairs do you use it on? Let me know. All right, so the next pair I have is, let's see here. What do we have? Euro yen. So the euro yen this week didn't do that well. Didn't do that well at all. Made 7 trades. And if it weren't for this last trade from earlier this morning, I would probably be in the negative. For sure I would be. I mean, this one is this short that I closed out right before the session ended was a 47 pip trade. So I was able to at least get above water for this particular pair. And then the previous trade was a long position, but it ended up reversing course. It was a steep sell-off here and didn't really make too much money on that one. I mean, if you look at where it closed the position, I made like 6 pips on that, when at one point, you know, it was up over 40 something pips. But again, you're not going to be able to get all the money. And the reason, so you don't want to get in the habit of taking profits when you're just up like 30 pips, because you'll end up over time. You have to let your winning trades run. You got to let the profits run and just keep your losses fixed. That's how you win in trading. You keep your losses fixed and you let your profits run. So if you are going to take some off the table, don't take all of your position off. Maybe take a third of it off, half of it off, something like that. And keep that thing running as long as you can. And so we also went short prior to going long here. That was another, not too much, about 12 pips, 10 pips on that one. But this trade here was a decent one. If we didn't have this pump fake that threw everyone off, you know, because I remember when this happened too. This thing shot up in one 5-minute candle on the euro yen. It shot up like 30 pips in one candle and then traversed that whole thing. If it hadn't done that, it wouldn't have triggered my short to close, because it ended up giving like a buy signal, or, you know, preparing for a buy signal. And so kind of took us out prematurely there. Again, you won't be able to get it all, people. And so that one was only 30 pips I was able to make on that trade. Versus, this is a crazy thing, versus if that didn't happen, that would have been it would have closed my short trade there at 88 pips. So about double the amount of profit would have occurred there. And so here are some other trades. We just kind of going through the sequence here. Went long, sold off, ended up closing that one for a loss. This one ended up being a loss as well. That was a short position, ended up going the other way on us. So that was a loss of about 15 pips there. And then the next one, kind of the same thing. So the markets this week for the euro yen was tough, man. Couldn't get a good clean direction on the markets. As you can see in this area right here, it was a kind of a net zero pretty much. I mean, it went up, came down, went up, and came back down, you know, so that stuff happens. And I think that's it for that one. Yeah, that's it for that week. The next pair is the pound dollar. This was a good week for the pound dollar for me. Let's see what Maximilian says. He says, I use it as a primary indicator on all markets, truthfully, in conjunction with simple support and resistance. I also use Fibonacci extensions from time to time too. Oh yeah, that's a good combination right there. Definitely a good combination to have. And that sounds like a winning trading strategy, to be honest with you. For me, it's just kind of hard. Like, I could create some algos that take into consideration support and resistance. I'm pretty sure I can, from within Pine Script, if I can listen on the chart and listen for particular objects that I draw on the chart, as long as I label them. If I label them the proper way, I can use that labeling of that line, and should be able to, from a programming perspective, say, okay, if price touches S1, just for example, support or resistance R1, it would be R1, R2, R3. If it touches that, then take profit or something like that. So I could do something like that. Maybe I'll work on an algo that does that, because let me just double check. Let me see if I can actually label a line. So if I go into here and let you guys see this, if I configure it, yeah, I'm not too sure. I'm not too sure if show text is an actual label or not. I don't think it is. This is just going to show some text right below it. So I'm not too sure if you can actually label these in a way where I can pragmatically reference it and do something with that particular line. I have to look at Pine Script's FAQ or wiki and see what I can do with lines and stuff like that. Not too sure though. So yeah, pound dollar, good week for the most part for pound dollar. As we go through here, this was the kind of whipsaw action that we saw in the prior pair. Really screwed up a lot, because again, if we were still in that short and didn't get prematurely reversed as far as the position, we're talking about, I would have still been in the short, and that would have been literally at close at the end of the week for about 60 pips, instead of closing up here trying to go long as we did. And then getting tapped out of that long. Actually got stopped out. That was a full stop on that one. And then going short there. So yeah, that was crazy. But this was the biggest trade of the week out the gate. We started the week off strong. Nice long trade for about 2.5, almost 2.5 days, 2 1/3. There were only 5 trades this week in the pound. So that was a 121 pip trade. Those are the types of trades that really put you ahead for the week. You feel me? So that's pound dollar. Pound yen is next. Bad week for pound yen. Pound yen was a horrible week, ladies and gents. So this was again, if I didn't have this trade, it would be even worse. I ended the week with the 65 pip win on that trade. for pound yen. That I'm trying to tell you, if I didn't have that, it would be much worse this week. But it was just a lot of back and forth, not too much price action, as you can see here. I mean, we started the week off. Essentially, this was the region that we were in. Oh, I'm sorry. Let me back up and do that over again. So I mean, if you take a look at this, we pretty much stayed in this range. Pretty tight, I believe, tight range. Let me see how many pips this is. $175 pip range for the whole week. Sounds like a lot, but you know, it's for pound yen, that's not a lot. It's not a lot. So all right, Maximilian, take care, bro. So yeah, this was one of the worst pairs this week, performance wise. I mean, as you see, I mean, it just kept getting tapped out here. Very few that were profitable, if any. Like this long trade was profitable. Our shorts were getting wrecked this week. If you look at profitability on both of these, though, we're actually negative or below 1, the profit factor. So yeah, bad pair, bad week for the pound yen. Euro pound, much better, and closed the week out strong as well. Like I said, Friday really saved me this week because I would most likely have been in the negative on the pippage. So, you know, Friday really came through. So good long trade there. That was about, actually it wasn't that good, that particular trade. 4 or 5 pips. It looked better than it actually was. We had a little dip there and shot up a little bit, but this particular trade, the short, was a better trade. 10 pips, and then must have had a nice short trade here. That was about 15 pips at its bottom, 38 pips. But this was the bigger trade at the beginning of the week. This short position was about a 50 pip trade there. So that was pretty good. And I think that's it. Yeah, that's it, people. Those were the trades for the week. Ended up just over 69 pips for the week. So we'll be at it next week. Should be way better. So yeah, you guys, if you don't have any questions in the chat room, let me know. We got John Hill, the MACD and RSI bearish divergence on the S&P and Dow playing out. Here we go. John Hill with his MACD RSI divergence strategies again. Hey, John Hill, are you in front of your computer? You in front of your computer tonight? Or your screen, I should say? I need to understand this MACD RSI divergence stuff you talking about, man, because I couldn't follow it on the Bitcoin one from last night. Oh, speaking of Bitcoin in the crypto space, let's take a look at those algos really quickly. So for this position, you're getting a sneak peek here. But we essentially, yesterday, I told you guys that I thought we were heading lower, but we ended up not doing so. I took some profit on, I think, Ethereum's pair. last night, right after the live stream. Just took 25% of the position off the table for our team. But that ended up reversing here for 2.5% move. That was a 2.5% short there that we were able to profit. And then we went long here. But look at that. Clear reversal. So to me, if I'm just looking at this, with this big move going right back down to test where we were last night, I think we're going to break. I think we're going to break to the downside, and we are short right now. So that's a free trade for you. We just went short 2 hours, or actually last hour. Went short at 8 o'clock. So went short on the Bitcoin versus USD. Got a stop loss at 84. Is that 52? Yeah, 84.52. And yeah. So I mean, I feel more comfortable with. I was, a little upset that we went back long, because I thought, just fundamentally looking at things last night with you guys, I thought that we should be heading lower. And so it's good to see that the algo kind of turned back around and went short again. So we'll see what happens with that. Ethereum actually got stopped out of its long after it closed its short from last night. So this is the one I took 25% off right around here. And so we ended up pretty much not making any. Well, we did. We made like 25% of that, whatever we were in. Let's see, we were up at this point, so about 3.5%, which is not bad. So we took a quarter of that profit off there, but then the rest ended up just being a wash. And then we turned around, went long, and we pretty much got stopped out. As you see, we crossed that green line, but we're not yet ready to go short. So once the background turns red, we'll go short, and hopefully that is the right move for that too, because as I told you guys last night, the next area of support is actually like down here, $149.60. So I mean, even from here, we're talking about setting up for a trade potentially of 5%, almost 6% trade. That would be great. We can get that. I would definitely take profit, take some off the table at that line or right before it for the team. So we'll have to see what happens here. But yeah, give me a call if you guys want to talk. John Hill, I'm just waiting on him. We're going to talk about this strategy that he uses, the RSI MACD divergence. Hell, I'm hella confused about that. So he's going to help us out tonight. But if you guys want to give me a call, I didn't even check. Yeah, okay, I don't have any callers, but if you want to give me a call, yeah, call me up, 669-900-6833, and the code is 169-861-119. So we'll just wait for John Hill to get back here in a second, guys. All right, John Hill. So take us through this divergence on the MACD RSI that you use as your strategy. I'm gonna pull up Should I pull up the S&P 500? Let's try that. I need to know what brokerage you're using as well. Wow, markets must have, I didn't even pay attention to what the equities were doing today, but it looks like it did not have a great day at all. Let me turn off these algos on this chart because that does not, there's no relevance there. Though it does look like it, actually, it would have been a great trade if I mapped this on my algo. Look at this, guys. It would have gone short. Right as the downturn happened. That's interesting. May have to look into playing with that. The thing is, man, you know why I don't trade equities? The leverage isn't that. Not leverage, but the moves aren't all that big. I mean, but this would have been a big move. 1% definitely would have been a big move. That would have been huge. That's a big move down. So yeah, I'll have to take a look at this. Mapping this. I can actually, on Trader's Way, I actually can trade the S&P. Yep, I sure can. So that may be something that I look into. Yeah, these look like pretty good trade. Even though there were only 5 trades, I can actually back out and go see what the last month looks like with this pair. Without any, I haven't even changed anything. This is from my pound Aussie algo. This is interesting. So I'm sure with a couple of parameter tweaks, I can get this thing to trade pretty nicely. Thanks, John Hill. He said trade the US 30 for a bigger return. So which pair should I be looking at right now, and on what brokerage? Let me know, John Hill. But look at that, people. That's a nice, my algo trends pretty nicely with the S&P 500. I'm not gonna lie. Look at those moves. I mean, dang. I would have been stopped out on this. But again, I haven't even, I'm gonna map this, and maybe next week get back with you guys on the performance, because I would need to adjust like the stop losses and stuff like that. These are all based on the pound Aussie, but this looks pretty good. I mean, if I go and just do some tweaks right now, I mean, the first thing I can do, we don't have any shift on right now, so adding just 1 bar or 2 shifts, and this is on the 5-minute, it increases my profitability by big time. Almost double. Actually, it is double just with the 1 shift. Let me see here. Yeah, I have to play with it. I don't know what the standard range is for S&P 500 and its stop losses and stuff like that. I'm not too sure. 0.28% may be too tight of a stop loss. I'm not sure. I'm increasing it now. So with a almost 0.5% stop loss on the long side, and let's see. The thing about this, I will have to monitor this anyhow, even though the performance looks very good, as you guys can see at the bottom of the chart, bottom of your screen. looks really good now, but what this can be, and this is something I'll talk about at some point when I go over how to make an algo. What you don't want to do is what's called fitting. You don't want to fit your algo or your strategy to the data that you're back testing. So that's a very common rookie mistake that many people looking to develop algorithms do. They end up fitting the algo to, so basically what you do is you have, let's say, a month and a half of data, right? So you do all the parameters and stuff to tweak it so it's perfect for that time frame. You're basically almost doing some hindsight trading because you're tweaking everything so it's perfectly fit for that time frame. But that time frame most likely is not the sequence of moves or price action you're going to see going forward. Okay, so that's why many people starting out, with creating systems and trading systems and such, especially on like shorter time frames or smaller time frames, 5 minute, which this is, the data set is very small. You're only talking about a month and a half or so. So I would either play with something right now and I would need to forward test it for like a month or 2 or 3 just to see how it pans out, or go to a higher time frame like the 1 hour and do something on that time frame where I can have more data, like a year and a half worth of data to go off of. So we'll see. Let's see what John Hill is saying. Like I said, I was using EURJPY for Forex. At the low, I would have longed on the left. Yeah, this is pretty good performance just out of the gate. Not even playing with anything of the parameters or anything with this S&P 500 index. So I'm definitely gonna look into this, and I'll get back to you guys on adding the S&P because I can trade it. I definitely can trade it on Trader's Way, as you can see. Look at those trades, John Hill. Woo! Look at those trades, big fella. And that's the icing on the cake right there. Boom, went short there. End of the day, 1% in the green if you would have shorted that. But again, I'm going to have to look into this. This is nothing definitive. I need to forward test and do some more tweaks to just see. I have some strategies that I use in calibrating the algos that I don't know if I even want to share that. It's just a method I use to figure out like ahead of time if I'm fitting the data, because normally, like, you'll look at the sequence of parameters that you're using, and if it's a range of sequence, like a range of numbers that you're using, and that whole range is pretty profitable, that most likely means that that may sustain going forward. If you got a number of parameters that you tweak for your algo, and you change it one tick up or one tick down, and it like changed the profitability by tenfold, it is just completely night and day, then you may be looking at like a one-off set of parameters that really isn't something that will last long term, so just something to think about. And let's see what John Hill is saying here. He says, what's the buying zone for ETH? The buying zone for ETH, Marco Polo, would be, as far as me looking to reverse course. If we go, like, we would go short next, we'll be looking for a short position because we got tapped out of our long. But somewhere around 150 would be a buy-in zone, in my opinion. Just looking at it from a technical standpoint, 150 would be a buy-in area, or a short covering area if you're going short. That's what I see. So we'll see what happens. Again, we went short on Bitcoin a couple of hours ago. Switched positions there. John Hill said he bought the VIX options all week. That was probably pretty good. What did the VIX do this week? Let me see here. I'm going to go ahead and save this. One second. I'm going to go ahead and save this bad boy to a new chart and start working on that. Let's see here. Give me 1 second, guys. Make copy. Not sure why it didn't save. Because I didn't save it. So I would have had to save it. Let me just do something really quickly. S&P 500. Let's do this. SPX. Reset price. Reset price, and make this like that, and I'm going to do a copy, and paste. I'm just copying over the settings from the S&P chart that we were playing around with. So I'll work on that maybe over the weekend, see if I can pull something together that's profitable there. And we'll just refresh that. Marco Polo, you asked a good question. When ETH 2.0 comes out, will the value of ETH 1 go up or down? I still don't understand the relationship. So there won't be there's no difference there, Marco Polo. It's going to be the same token. Okay, so it's not going to be a new token. It's just going to be on a new consensus algorithm. It's going to be the same token that they'll be using. So once they merge once they do a hard fork, it'll just be the new token, the new ERC20 token on the new platform. So it'll be the same token. You don't have to worry about that. I think the value will go up though. If they're successfully able to roll out Ethereum 2.0, yeah, you'll see a price increase in Ethereum for sure, just solely off of speculation, I think. So we'll have to see what happens there. But all right, people, that's pretty much it for tonight. I just wanted to jump on, give you guys an update for the week. Remember, next week is going to be huge. We got a lot of stuff coming down the pipe. Just to quickly review that again, for those jumping in at the end of the stream, I talked about this at the beginning. This week is going to be a big week. We got the Bank of England possibly doing another rate cut. We've got the FOMC, federal funds target rate possibly being cut as well. That's on Wednesday. The FOMC, the Fed's fund rate, I should say. And then on Thursday is the Bank of England bank rate cut. I think they're going to cut. The consensus is that they are going to cut. So we shall see about that. Montre. That's pretty much it though, ladies and gents. Make sure you guys hit that like button. Subscribe if you aren't already. Tech Geek, yeah, man. Just wrapping up, man. I don't think we've got too much action tonight. I just went over, you can check it out, the video though. I just went over the trades for the week. And next week is going to be a big week, man, in the FX market. Probably equities as well. So I'm going to work on that S&P 500. Try to map that out and see, start playing around with that next week as well. Doing some forward testing on that. And we'll see what happens. All right. Make sure you guys like, share, and subscribe. Marco Polo says, is it better to buy Bitcoin or Ethereum at this time? Really can't give you financial advice on that, man. I mean, you know, Bitcoin is in the crypto space, I would say like the safe haven, right? That's like the safest play you can go with. If we have a bull run, if like markets take off like they did in 2017, though I don't want to say that. I don't want to get people's expectations all willy-nilly and all out of whack. 17 was an anomaly in my opinion, but we've had rallies in the past where we could see Bitcoin double in price. That's still big, right? If we see something like that this year or going into 2020, I mean, what other asset class are you going to be able to get a doubling in it? You know, there is possibility that you lose half your money too. I mean, this market is very volatile, but Bitcoin is more of a safe haven. Any of the altcoins are going to be, you're going to get more profitability out of them. The percentage gains on them will be much higher if we do see like a new bull market in the cryptocurrencies. You'll see the altcoins outperform Bitcoin percentage wise. But it'd be pretty hard to pick which ones are going to be the ones that really, you know, do well, in my opinion. So we'll see, man. We'll see. All right. I'll talk to you guys later. Again, hit that like button. I'm out of here. Holla.
Fuck it! Do it live! I'll write it and we'll do it live!
Okay. Ready?
Fucking thing sucks! We'll do it live.
Okay.